Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. So today we are discussing the much anticipated video, which is the saving in your home loan video. I hope it's not disappointing because there's nothing complicated about it, but nonetheless, here we go. If you are new, thank you so much for stopping by. We really appreciate. And if you're already a returning subscriber, an awesome appreciation. Right, so before we get into the home loan discussion and how to save in the home loan discussion, please do remember to actually watch the video I did of property investment, how to prepare for the buying a property, the financing consideration. I also did a video where I shared the mistakes I did along the journey, so you'd actually be better off to watch those videos, or at least to help you contextualize the content of this video. So we are assuming here you've made up your decision that you're going to be buying a property and you're going to be using bank financing, or you already have a property that is bank financing and you're just trying to make sure that you are actually making the best out of the home loan that you have. And when we say you have a bank finance property, we're not saying that maybe the bank has financed 100% of your mortgage amount. Sometimes we may decide to actually put up a deposit, although it's not required for a first-time deposit for a first-time buyer in Namibia. So you may put up a deposit, you may pay your own lawyer's fees, you may pay your own bank fees, or you may have just gotten all of that funded by the bank. But the principle are the same despite what you've decided to do. So when it comes to a home loan, you need to understand when the bank gives you money, they are basically taking a risk that by the time you are done paying back that bond in 20-30 years time, if you take an easy bond, maybe it might have gone above the 20 years, the money is not worth how much they would have given it to you in 20 years time, because obviously with inflation the purchasing power of money actually decreases. So they charge you what is called interest to compensate them for the risk that their money is not going to be worth the same in 20 years time like it is today. So that's the whole purpose of interest. And I think it's very important when you are looking out for a home loan to sort of have a benchmark of interest to see whether you are actually granted a good interest rate or there's actually room for negotiation. So someone actually reached out to me, I think a couple of days ago, asking they've got an X amount of interest from the bank, they're worried it's actually too high, can they negotiate it down? And I was actually telling them they've actually gotten a best interest rate because the banks normally try to give you prime +2 or prime +1 if you are maybe a relatively new client, whereas if you are maybe a good client and you already have banking history with them, credit history, your credit report is good, they might give you prime minus. So she had gotten a quite relatively good interest rate. So it's very good for you to know what's the benchmark when I'm looking for a home loan, to be able to decide whether you've actually gotten a good deal or actually a bad deal. Okay, so that's just one thing on the side. So now let's go get into the discussion around saving your home loan. So a couple of maybe years ago, the banks introduced what is called a flexi facility. So a flexi facility is a feature on your home loan account that allows you to pay in advance your home loan. So basically, the bank will give you, for example, 100,000, and they'll say for 100,000 you need to pay us 1,500 every single month. But you don't have to stick to 1,500. You can decide maybe you got a bonus in this particular month and put a 20,000 there, and your 20,000 there will stay in that home loan account. So for as long as that money is sitting there, it's saving you interest, meaning when the bank tries to calculate your monthly interest rate, they will take the capital amount, they'll subtract this saving that's there, and they'll calculate the interest on the net amount. But they don't automatically apply the savings on the home loan account. That means you continue to have access to this money. So when you want this money, you don't even have to get permission to the bank. You can just go and draw your money because it is your money that you prepaid in advance. But the advantage for you is that for as long as it's sitting there, it's actually saving you interest. So maybe if I can just also refer to a video I did last year where I said how to effectively use your banking app correctly, and I'm speaking on behalf of my bank, and their app is quite nice. So to transfer money from your transactional account to a home loan account, is just a click of a button where you transfer, because your home loan and your transactional account are with the same bank. So you don't even have to load beneficiary or reference or anything, but you do need to check with your bank how does it work to transfer money into a home loan, and what is the access rules when you actually want that money. So for example, if you guys are following me on Instagram, you would notice that we are building, and I keep updating the numbers and saying that the budget is tight, etc., because we are doing cash. We actually save that money using the home loan. So at the time I actually got a home loan, the interest rate was high, so I was trying to make sure that I try to save the interest as much as possible. And the one way to do that is actually to save to save your money in your home loan, because every time when you are deciding where to keep your money, you must decide, what would I earn if my money was in instrument A as a saving, and what would I earn if my money is in instrument B. So for example, for me, I know I needed this money to actually construct, to start this construction at some stage. So I needed to put it in an investment vehicle that it's liquid. So shares, bonds, and things were already off the market. So the best place I could have put this money is either my call account at NamPost or a 32-day account, and eventually when I want to start this construction, take it from there. But I do know that the interest rate at both of these were less than prime, so there was no way I was going to tie my money there when I could put it in a home loan account and save basically prime plus 1 or 2, whichever interest rate I got at the time. So the opportunity cost for me to keep my money on a 32-day account was the interest I could have been saving on my home loan if I kept the money there. So I made the calculation and actually decided my money is better off in the home loan account. So when you're actually evaluating opportunity costs, etc., you mustn't look at how much money am I making, because if I had put that money on a 32-day account, on a call account, that money could have been earning interest, for example, just say for argument's sake, at 4%. So every single month, my balance at NamPost or call on my 32-day account would have been growing by that interest. But if I put it in my home loan account, I don't physically get interest in my account, but I save. So that means every single payment that I make on my home loan on a monthly basis reduces my capital a lot faster. So the opportunity cost was a gain, but it wasn't a gain in terms of me getting physical cash. It was gain in terms of me attacking my capital faster. And in the home loan, space, the more you can attack your capital faster, the more it actually is quicker to pay off your home loan. So basically, that is the whole concept of flexi facility and saving in your home loan account. The advantage is you can do it at any point in time, and when you want to draw your money, you can take your money at any point in time. And I just want to caution you here. So if you log in your app, right, you might see that your loan is 100,000. You actually saved 10,000 as a prepayment. So when you log in, you will see the net amount of 90. When you drill in, it will show you your loan amount is currently standing at 100,000 and your savings are currently sitting at 10. If you withdraw that 10, your loan jumps back to 100. So it's just a balancing act. So the time the money is, the savings is staying there, it's saving you interest, but the moment you draw it out, your loan goes back up. So that's just the one thing that you need to understand. It's really just a savings mechanism to help you actually, manage your capital. So let's just say, for argument's sake, you go to the bank, you get 100,000 worth of a loan for your property. The bank then decides to give you a prime plus 2%. Prime is currently at 8%, and then if we add 2, your interest rate is then about 10%. Let's just say, for argument's sake, you don't take the easy bond product. You pay over 20 years and you are making 12 installments a year. So based on that, your home loan installment would have been 965 per month. So every single month when you pay, the bank then decides to split that 965. A portion of it will go towards interest and a portion of it would go towards capital. So in the first 12 months, assuming there's no prepayment in the first 12 months, you are keeping up to the minimum installment that the bank requires you. So your installment, for example, in month 1, 833 of that would go towards interest, and only 131 would go towards capital. So your capital, your 100,000, only goes down by 131. That's why people say, yes, home loans are a scam, because the first few years you are basically paying your capital, and it takes time before you can start attacking your capital if you're just continuing to make the minimum payment. Let's say now you heard about this flexi facility and you decide you are going to actually put in a bit of extra in your home loan, and instead of you doing it on a monthly basis, you decided the month in which you are getting a bonus, you're actually gonna put up your 20,000. And let's just say you got your bonus in December and you decide you're gonna put up your installment, your bonus as an extra payment in December. So then what happens in December when you make your payments? So when you make your payments in December, that 20,000, 820 goes to interest, and the remaining amount goes towards attacking your capital. So anything you pay over and above your minimum payment actually goes towards capital. So because of that 20,000, your capital has decreased, and before that extra payment, you are paying in the region of about 800 towards interest. But from that point onward, your interest is actually decreasing to 600, and thereafter about 300 of your installment has gone towards your capital reduction. So from that point onward, your capital is actually starting to reduce a lot faster. So with this whole facility, with this home loan facility, flexi facility now with the saving, so for as long as that 20,000 is there, you would get the advantage of a bigger portion of your installment on a monthly basis actually going towards your capital. Let's, for example, then say again, you are like us, you're actually just saving in here for the construction has actually started, so you want to draw that money back. So if I then go in my home loan account and then transfer this from my home loan to my transactional account, my loan goes back up, and then a significant portion of my payment actually start going back to the interest. So it's just really a game plan. So if you really don't want to get access to the facility, you can tell the bank, okay, I've prepaid about 20,000, please apply that to my home loan account so I don't have access to the money. So it's then actually just, used up by the bank, and it's no longer a prepayment. But that's an instruction you have to specifically give your bank so that they can do that, because it's supposed to be a flexible facility for you to pay when you have the excess fund and to draw it back when you actually need the money. So yeah, that's actually all I had on this home loan video. It's actually not complicated. Just find out from your bank whether you have whether you have the advantage of the use of the app, whether you actually need to put in a notice to get that money, whether you have to physically go to the bank to get your cash if you want to actually access funding in this flexi facility. Otherwise, it should be relatively easy, and the app can actually do all of that for you. So yes, thank you so much for joining us, and thank you for your home loan questions. I unfortunately didn't combine other home loan questions in this video because this video is going to be long, but I did get asked quite a few questions, especially how people can prepare for getting home loan, especially when you work on a contract basis and you're an entrepreneur. So I think that is really a video that is worth its separate content. Therefore, I'm going to do that next when I have time to film. So thank you so much. Give us a like, a thumbs up if this video has been helpful to you, and please consider subscribing if you haven't done so. Until next time, it is goodbye.